Now, loads of questions coming in about the Moody's report from a few days ago, predicting a, quote, moderate price correction for Dubai real estate starting next year. Joining us in the studio now, we welcome the Assistant Vice President and Analyst at Moody's Ratings Corporate Finance Group, based here in Dubai, Aziz Al Sammarai. Aziz, good morning. How are you?
Good morning. Thanks for having me.
Good to have you with us. So lots of people picking up on this prediction of a moderate price correction. Tell us in your words, your thinking behind this and your conclusion.
Yeah, absolutely. So we do expect around 150,000 units of homes to be delivered between the period of 2025 to 2027. So if you think about this, this is around 50,000 units delivered every year from now until 2027, which is slightly higher than the 40,000 units that were delivered over the last 4 years. And then from our estimates, we do believe that in order for these homes to be observed, we should see the city adding around 200,000 residents every year for now until 2027, which is slightly higher than the average residence additions for the last 10 years of 150,000 residents a year. And so for these reasons, we do see a modest price correction. But if we do step back a little bit and kind of look at the market as an overall, we do see stable market conditions over the next 12 to 18 months. And that's really driven by the fact that we have strong demand fundamentals, and we also have favorable macroeconomic conditions. And then we do believe our rated universe, from a developer's perspective, are well equipped to deal with this cycle this time.
Okay, there's lots to unpick here, so let's look at it in detail. To give some context, I should say you're a ratings agency and you rate banks and you rate development companies. You give them a credit rating. That's your job. You're not real estate brokers. You're not in the real estate game. You're a ratings agency. And the headline of your report was this: UAE developers well positioned for supply growth and price moderation. So explain your thinking. Why did you even produce this report? What was your motivation to produce this report?
Yeah, I mean, if you think about the market as being cyclical, right? So the question here is that from a rating agency perspective, what's the impact on our rated universe the next time there's a cycle in the market? And for this reason, we wanted to give more colors of saying, the market should be fine or stable over the next 12 to 18 months, even though we do expect a prompt price correction. So if you think about demand drivers here, right? So you have population continue to grow, as I mentioned, and that's really driven by the fact that Dubai continues to be a lifestyle hub, a business hub, and continues to attract residents here. And do have, on the other side, shrinking household sizes. If you think about the household size today is about 4 members per household. That's it's actually lower than 4.5 members in 2019. Why does this matter? Because this change by itself has helped create a need for 85 additional house units. And then at the end, we do see also rising interest from high net worth individuals, which is also fueling demand for these houses. So that's from a demand perspective. I think from our rated universe, we do see that they are well equipped and resiliency to deal with the next cycle, and that's mainly driven by revenue visibility. I think if you think about MR, for example, they do have around 130 billion dirhams of revenue that's been sold but not yet delivered, and so that gives them around 4 years of revenue visibility. As well as the gross profit for our rated universe continues to grow, and we do expect this to go from 46 billion dirhams this year to more than 80 billion dirhams by end of next year.
Okay, so Aziz, my reading of this was, yes, there's a lot of supply coming and prices might fall a bit, but it's not going to be a 2008 style crash. That was my paraphrasing and reading. How accurate is that?
That's correct. I think, that's been driven by several factors. I mentioned the demand drivers in a minute. The macroeconomic drivers as well is another factor that helps, stabilize the market over the next 12 to 18 months. But also regulatory reforms has helped increase confidence between buyers and investors. We've seen, Dubai been leading the way in regulatory reforms since 2008, introducing escrow accounts and some other reforms. And we've also seen other Emirates following suit. You have Abu Dhabi following the same reforms, and then Sharjah also introducing escrow accounts by the end of this year, which is also helpful in stabilizing the market.
How aware are you that when a ratings agency like Moody's or your peers, Fitch, S&P, put out something like this, it's going to attract a lot of attention. You'll be aware of the Fitch report that came out, and they're one of your peers a few months ago, predicting a 15% price correction. I mean, Tom, the reaction that we got from brokers and developers, some of them were apoplectic with rage that someone could dare suggest that prices in Dubai might fall.
They feel it very personally, don't they?
They do take it personally. And as rating agency, you get it in the neck either way. Of course, back in the financial crisis of 2007-8, ratings agencies criticised as the watchdog that didn't bark. How do you manage those pressures, if I can ask?
Yeah, I think from our perspective, we do focus on the resiliency of the market, right? So this time around, like I said, the home builders are well equipped to deal with this cycle. I think they have, good revenue visibility. They have strong gross profit growth, and then they also have. They've changed their payment plans, right? They're more front-loaded payment plan at this point, which gives them cash flow predictability and also helps cushion against price volatility. And so we do expect that this time around, those builders are well equipped to deal with this cycle.
Okay, 15 seconds left. I'm going to let you summarize this with a final thought. What's your final thought you'd leave us with?
Yeah, absolutely. I think from our perspective, for buyers, this should be a great opportunity, right? So you have potentially easing rental rates because of the supply coming in, and prices also experiencing modest price correction, which should support demand over the long term and create opportunities, affordability for the buyers. And then from our perspective, we do see that the market continue to be resilient this time around.
Aziz, great talk to you. Appreciate you joining us this morning. Thanks very much indeed for being with us. Aziz Al Sammarai, Assistant Vice President, Analyst at Moody's Ratings Corporate Finance Group here in Dubai. Shukran. Thank you. Merci.
It's the Business Breakfast.
Dubai Eye 103.8 podcasts. Exclusive content, all on demand.